Are you an NFT collector or artist in Washington? If so, you may be surprised to learn that NFTs have sales taxes applicable to each NFT that is sold in Washington. But here's the catch. Almost no one has paid sales taxes on the sales of NFTs in Washington. In this video, we're going to go over when sales taxes apply to NFT sales, how to collect and remit these sales taxes, and how to make sure that you stay in compliance and avoid surprise tax bills and hits to your reputation due to non-compliance. So what is a sales tax? A sales tax is a tax that's levied at the time of the sale, at the point of sale, that's usually collected by the seller and then remitted to the state taxing jurisdiction. The state tax rate sales tax rate is going to vary from state to state. In Washington state, the sales tax rate is 6.5%. So when does Washington state tax NFT sales? In Washington's interim guidance, they provided 4 different types of NFT sales and apply sales taxes to these based off of these scenarios. The first scenario is if you're selling a standalone NFT. So this could be, an NFT that represents a picture, music, art, but the purpose of the customer purchasing this NFT is to just obtain the NFT. In these cases, sales taxes are going to apply to the sale of standalone NFTs. The next 2 scenarios involve when someone's purchasing an NFT, but it's to obtain an underlying good or service. So this could be if you're selling an NFT and that NFT can get redeemed for a product that you're selling, or that NFT can get redeemed for a service or a discount on a service you're selling. So in those examples, when the NFT isn't the main object that your customer is purchasing, you need to look at whatever the underlying product or service is and determine the sales taxability based off of this. And you're going to have to look at what is that underlying product or service, and then how does Washington state apply sales taxes to this type of good or service. And then that's going to ultimately dictate whether or not that NFT sale is going to have sales taxes associated with it. The last example given in Washington's interim guidance has to do with royalty payments. If you're receiving royalty payments on an NFT, you're going to be exposed to Washington B&O taxes in that case, and you will have to make sure that you're collecting and remitting that at the time of transaction. So in this interim guidance, Washington state acknowledges that there may be NFT sales where a purchaser purchases an NFT and that entitles them also to receive additional products, goods, or services that are associated with that NFT. In these scenarios, you need to first look at the taxability of each specific product or good that you're selling and how sales taxes apply to them. And then you need to also consider if they meet Washington state's definition of a bundled transaction where you're selling multiple items together to a purchaser for a non-itemized price. There are few exceptions to this, but in most cases, when you're selling a bundled transaction like this, where you're selling an NFT that represents more than one good or service, the whole transaction is most likely going to be taxable for sales tax purposes. Again, there are a few exceptions that are outlined in Washington's guidance related to this. Most of those don't appear like they're going to apply to NFTs in most cases. So keep this in mind. If you're selling a bundled transaction, you need to look at Washington's guidance related to bundled transactions, and it's very likely that sales taxes is going to apply to the sale. So one of the most important considerations when it comes to sales taxes, and particularly sales taxes that apply to NFTs, is sourcing. All sourcing refers to is determining the location that a sale took place and which jurisdiction sales taxes should be collected for that transaction. So Washington state in their interim guidance has provided a hierarchy for sourcing NFT sales. And out of all the states so far, they've taken the first steps to addressing the issue of anonymity and pseudonymity in the NFT and blockchain space. So according to their hierarchy, firstly, if the sale takes place in a physical location, so, you walk into a store, you're in a physical location, and they sell you an NFT physically, it's going to be based off of where you are in that physical location. of the store. Obviously, that's not really what's going to take place for most NFTs, since most NFTs are sold online. So then we get into this part of the hierarchy. So next, if we're not looking at a physical purchase in the store, we're looking at online sales. So if something is sold online, the first thing that they're going to look at is the purchaser's address. Now, the purchaser's address can be provided at consummation of the sale, either for an address that you need to send a product to, or just as part of collecting that information as part of the sale for sales tax purposes. If this is done, then the sales taxes is going to be applied based off of the purchaser's location at the time of sale. If this is not done, and this is the case with most NFT sales who have not been collecting their customers' information, if this is the case, Washington then reverts to the seller's address. So if you were in Washington State and you did not collect any customer information and you completed an NFT sale, every single transaction that's taxable for sales taxes should be sourced to Washington State, and you should collect and remit sales taxes for Washington State in those instances. So what Washington's done with this sourcing guidance is really address the issue of lack of customer data for a lot of these NFT sales. And they basically have indicated that not collecting customer data is not going to get these NFT companies in Washington off the hook for collecting and remitting sales taxes. So sourcing is very important, and it's key to use a software like Digital Impost that can collect this information from customers in terms of their address and zip code to allow you to charge the right sales tax rate and collect and remit that to the appropriate sales tax jurisdiction, while also getting all of the right data at the time of the sale related to your customer's address, related to the sales tax collected, related to the total sales amount, so you can properly and accurately file your sales tax forms with the appropriate tax jurisdictions as well. So marketplace facilitators that are allowing sellers to sell NFTs on their platform to end users most likely are going to qualify in Washington State as a marketplace facilitator. And if they meet nexus standards in Washington, and this can be physical or economic nexus, they're going to have to register in Washington State as a marketplace facilitator and meet the sales tax and remittance requirements associated with this. Now, what this means is that if you're a marketplace facilitator and you have a nexus in Washington, you actually need to collect and remit sales taxes, not only on any sales that you're completing as a platform, but any sales that the sellers on your platform are also completing. So you're responsible for collecting and remitting sales taxes for any sale that takes place on your platform, even if the sale is completed by a third party that's registered on your platform. So in addition to Washington State sales tax rate, certain transactions can also have an additional tax at the point of sale, which is a business and occupations tax. This tax, similarly to sales taxes, will be applied to NFTs based off of the underlying product sold. So you need to look at that specific guidance related to the specific product you're selling to see if this is going to have this B&O tax associated with it, in addition to sales taxes. One main example where NFTs are going to have this business and occupations tax associated with it is when NFT creators are receiving royalties. This is one of the areas that B&O tax will apply in Washington on NFT royalties. Another consideration that will largely impact whether or not you have to collect sales taxes on NFT sales in Washington is your nexus. You can have a physical or economic nexus in Washington. Physical nexus is straightforward. If you have any type of physical presence in the state of Washington, this can be an office, a warehouse, any type of physical presence, you are going to have a physical nexus and have to collect sales taxes as applicable in Washington State. In addition to this, if you're out of state, you can still have an economic nexus in Washington. An economic nexus applies in Washington anytime that your sales exceed $100,000 in the state of Washington. So this is something that you firstly need to track on an ongoing basis to make sure that you don't have an economic nexus in Washington and that you're not approaching an economic nexus in Washington based off of that sales threshold. If you meet these thresholds for nexus, whether it's physical or economic nexus, whether you're a retailer or a marketplace, you are going to be liable for sales taxes in Washington. The consequences for not properly and remitting sales taxes in Washington state can be very serious for sellers. Washington state, along with other states such as Pennsylvania, have indicated that their NFT sales tax guidance is interpretations of existing regulations. So this means that they can apply these rules retroactively. That means that they can go as far back as 6 years on past NFT sales and try to levy sales taxes on those sales. So number one, this can lead to a very large tax risk for any NFT seller in terms of a surprise tax bill coming along with penalties, and they're going to be on the hook for those taxes. And at the very least, this is going to hurt their cash flow. They may or may not even have the cash flow to cover these tax liabilities. Additionally, this has a large risk for a NFT seller's reputation as well as the NFT industry as a whole. The NFT industry as a whole appears to me to be going into almost a Wayfair 2.0 moment for the lack of compliance related to NFT sales taxes. And as an individual company, if you start getting publicized for not properly collecting and remitting sales taxes, not paying your fair share of sales taxes, this will not look good from a public relations standpoint. Additionally, in states like Washington, where sales taxes are not properly collected by the seller at the time of sale, the customer actually is required to pay use taxes when they file their tax return to pay the sales taxes that should have been paid and collected at the time of sale by the company. So this can actually leave your customers with a surprise tax bill because you didn't collect sales taxes. They may have to pay use taxes and they may not be expecting that. So you may be asking yourself, how do I collect and remit sales taxes properly to be in compliance with Washington state and other taxing jurisdictions? There are a few challenges with this. The first challenge being the overall nature of the digital asset industry, NFTs and cryptocurrency, the anonymity and pseudonymity associated with the space makes it challenging for sales tax compliance. And that's because at minimum, we're going to need to collect some information related to your customer's location. At minimum, we need to collect the zip code. If we get their zip code, we can, in most cases, use the zip code to determine which state they're in, which county they're in, and to apply the correct sales tax rate based off of this information. So at minimum, you're going to need to collect your customer's zip code in order to determine their location so we can collect and remit the right sales tax rate. Now, there are many tax regions within Washington and within other states where simply collecting the zip code may not be sufficient. And this can be for a couple different reasons. One reason can be if you're just collecting the zip code, the postal zip codes may be different than the tax regions and the tax rates that apply at a given address. So there can be discrepancies between zip codes and tax regions. Additionally, there can be discrepancies if you're going by the zip code on applying local and county level rates. So to be perfectly accurate, you want to get rooftop accurate rates, which means you would have to collect your customer's full address. This is the best practice because, like I said, it leads to a rooftop accurate rate, but it requires you to collect more information from your customer. So, one of the first challenges to NFT compliance is balancing this desire in the industry to not provide identifying information with the fact that we're going to need some of it to properly get in compliance with these state taxing agencies. The second challenge after that's addressed is the fact that we're transacting in cryptocurrency in most cases when we're selling NFTs. So once we've determined what the correct sales tax rate to apply to a given transaction is we need to calculate, collect, and remit this sales tax in the native cryptocurrency that you're transacting in at checkout. So, if you're selling an NFT in Ethereum and you're selling that NFT for 1 Ethereum and there's a 10% sales tax rate based off of your customer's location that we've determined, we need to collect an additional 0.10 Ethereum on top of the 1 Ethereum for the sale in order to make sure that we're collecting the right amount of taxes on top of your sales proceeds. So, these are the two biggest challenges currently in terms of collecting and remitting sales taxes is determining the customer's address and then making sure that the sales taxes are properly collected in the right amount in the native cryptocurrency at the time of sale. Now, our team at Digital Impost has created a solution for this that automates the entire process of collecting your customer's information, calculating and collecting the right amount of sales taxes at the point of sale in native cryptocurrencies. And then we actually automate the process on the back end in terms of collecting the relevant information in a database and then automatically filing your sales tax reports on a monthly or quarterly basis to make sure you're fully in compliant for sales taxes across all state taxing jurisdictions. Digital Impost automates the entire sales tax process for NFT businesses and businesses transacting in digital assets. Our software at Digital Impost enables you to collect your customers' information before minting or before checking out in order to collect their address. On the back end, our API will calculate the correct combined tax rate based off of your customer's address for their state, city, and local sales tax rates. Then, based off of the combined rate, Digital Impost software will calculate in your native cryptocurrency the amount of crypto that you need to charge for the sales tax, in addition to the proceeds that you're charging for your NFT sale. Then on the back end, Digital Impost compiles all of the relevant information for tax reporting purposes relating to the blockchain data, the sales data, as well as your customers' information. And then finally, we automate the filing process for all the relevant state taxing agencies so you can be compliant with your tax filings. That can be on a quarterly or monthly basis depending on the taxing jurisdiction. In addition to that, we're able to monitor your nexus across over 11,000 taxing jurisdictions so you can never miss a sales tax filing in any jurisdiction that you may be creeping up on in terms of your economic or physical nexus. So Digital Impost is a complete end-to-end solution for NFT sellers and businesses transacting in digital assets that need to be compliant with sales tax filings.